Hello traders, Gary Wagner with the gold forecast here Monday morning here in Honolulu, Hawaii. It is the 11th day of October, as I said on Monday, and this is the daily report. Forex gold continues to move higher, and COMEX gold basis of December on a closing basis did hit a new record high today. That's on a closing basis. We'll talk about that, what we're looking at for this week, and a possible, and I underline the word possible, longer term scenario, all here on the daily report. Traders, you're looking at the most active December contract of COMEX gold, and it closed higher. Of course, it closed, as you can see, very, very near the top. We did have, this is a interesting candlestick because it's basically called a long-legged doji, or in some cases it is also called a rickshaw man. That's this candle right in here. The interesting thing was that, as you can see, they did take it down lower. They took it down, to about 1340. So there was profit taking that came into the market. But then as we got into the close, I should say, traders bought that back up, and that's what pushed us off this low here, and then to close very, very near almost exactly where the market opened. And what is most interesting is that it closed up, as I say, 1354.30, and that was up about $9 an ounce. And I find that very, very interesting. Very interesting indeed. Now, for those of you who have been following this report for quite some time, you realize that we've brought up on many occasions that relationship between gold and the U.S. dollar, especially when we're trading gold basis the U.S. dollar. And that is, there tends to be an inverse relationship. However, at certain points, what we found is that when it's safe haven purchasing, they tend to flock to the dollar and gold, and they tend to move in tandem. That's not the case right now. The IMF right now, the International Monetary Fund, and the World Bank meetings, right now there is disunity in the ranks. And there is a lot of talk of this currency war that we've been having, this race to the bottom, and there hasn't been any resolvement of that issue. And as that happens, as you can see, gold does continue to move higher. Now, I'm going ahead and I'm putting back up our Forex gold contract, and I want to show you a little bit of forward projection. Now, this is a projection that I did over the weekend, and I want you to realize that A, it is a projection. B, it is only a plausible way that gold could go, and it is certainly not what I think absolutely will happen. But I am pointing it out because it's the simplest of all. And that doesn't mean that that's what's going to materialize, but here's what I'm looking at. If we take this low right in here, and this is, of course, the beginning of that wave 3, and then we project a Fibonacci, we project our Elliott wave to go to 1400. And 1401 is basically 1.61 times the move of this wave right in here. Okay? And then, if we then make the further assumption that we might get a retracement, and that retracement we'll say is going to be about either 23% or 38%. 23% takes us right to this point right in here, and if it retraces 38%, it would take us here. In other words, if we see this be waves 1, 2, 3, if wave 4 retraces to 1340 or 1366, and then we see wave 5 simply be equal to wave 1, you'll see my upper level projection. And again, this is just one possible scenario, but it is plausible, but it is the simplest of all the Elliott waves. And I'm not saying that this is what we're going to see, but I am saying that this is a plausible scenario. the plausible scenario that we would look for would be this. This wave completes around the $1,400 mark. We then see a retracement. That retracement takes us either to A, 1361, which is this line here, or B, a 38% retracement, which takes us roughly to 1337, 1338, and then we get a $100 move. That would take us to the following areas. So we would be looking for a possible end or completion of this impulse phase could very well end at around 1470, 1465 before we saw a corrective phase take in. And of course, the corrective phase, although the last one was shallow, would then take us down a period, and then of course we would have our A, our B, and our C, and then we would re-enter this bullish super cycle that we're witnessing. Again, just a plausible scenario, but I did want to point it out to us. Traders, maintain your long position, obviously, at 1340. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you tomorrow. Bye-bye.